Fine. So this is the exercise which we are going to do. You're able to see the PPT? Yeah. So there's a company called XYZ. It's a private company, a supplier of goods, pays GST under the regular scheme. Okay, fine. That means it is not taken any composition, these things. It's a regular customer, regular, GST registered person. The company has made the following outward and inward taxable supplies during the tax period amount to are exclusive of taxes. So this is without taxes. How much, output, how much sale he has done, how much revenue he has made. Then these are the outward and inward taxable supplies during the tax period. Fine. So, so we have interstate supply of goods, 10 lakh rupees. Okay. Interstate supply of goods, 4 lakh rupees. So first is intrastate, second is interstate. Then he has purchased certain things, say within the state and outside the states, 3 lakhs and 1 lakh. Is that okay? So this is his sale during the for that period. So we have to make a, we have to see that how much GST liability he has got and how much input credit he would be available and how much he has to pay. Okay. So input tax credits. So these are the opening balances of input tax credit he has. The company has following input tax credits available at the beginning of the tax period. CGST 50,000, SGST 25,000 and IGST 60,000. So these are the opening balances we have. Okay. Then some additional information is given. The applicable rates for CGST, SGST and IGST are 9%, 9% and 18% respectively. How many students are attending for the first time? Okay, no issues. So you will follow, okay? In case if you don't follow, you can ask questions. Anybody other than her there? Last class who has not attended? Okay. So we covered certain things, but we know that there is CGST, SGST and IGST. Okay. CGST is the central government levy and SGST is the state government levy and IGST is against central government in lieu of central sales tax, which was there earlier. So 9%, 9% and 18% respectively. So that means IGST is 18%, CGST is 9% and SGST is 9%. It's a very simple question, so you'll follow it. All necessary conditions for availing ITC have been fulfilled. So we'll understand which are the conditions. If a person doesn't fulfill, then what happens. So we are just taking a very simple that he is eligible for all the input tax credit. Both inward and outward supplies are exclusive of taxes. So this is without GST component. So what we have to do, compute the total output tax liability for CGST, SGST and IGST. Okay. Number one, determine the minimum GST payable in cash for the tax period, ensuring optimum use of ITC. So whatever balances he has got, he has to use that and some money he has to pay if he is adding value to his product. So there will be some liability on account of that value addition. Okay. Calculate the remaining ITC balances, that is input tax credit balances, if any, after tax liability is discharged. Okay. Make suitable assumptions wherever necessary. Fine. So step one, first of all, we have to compute his output tax liability. Okay. So he has intrastate supply of goods 10 lakhs. Okay. Then he has interstate supply of goods 4 lakhs. So the liability will be like this. So because it's an interstate, so there will be two components, CGST and SGST. Okay. And the tax rate is given 9%. So that means he has to pay 90,000 rupees as CGST and 90,000 as SGST on account of the sale which he has made within the state. Okay. Now the sale which he has made out of the state, so for that he has to pay IGST. Okay. On 4 lakhs, 18%, which is rupees 70,000, 72,000. Is that clear? Any doubts? Now compute the output tax liability. Okay, we have already done. So total output tax, that means this much of tax he is supposed to pay. 90,000 on account of CGST and 90,000 on account of the state levy and then 72,000 on account of IGST, which was the outcome of our previous slide. Okay. then compute the input tax credit. Now, whatever he has purchased, on that he will be eligible for input tax credit. So, interstate purchase. So, within the state he has purchased 3 lakhs worth of goods, and interstate purchase of goods. So, he has also purchased from outside the state, which is 1 lakh. So, that means there will be input credit tax available to him of 27,000 each on account of CGST as well as on SGST, for whatever purchases he has made. Okay. Then for the interstate, that means he has supplied goods out of the state, it was 1 lakh, 18%, which is 18,000. Ananya, it's okay? Aap has rahe the, I mean, you are laughing. Simple one? Okay. Fine. Opening balances. So we look at the opening balances. So what are the opening balances? CGST, so this is given the question that he has got some opening balances of CGST, SGST and IGST. So that is 50,000, 25,000 and 60,000. Okay. So the next will be the total ITC available to him, which will be the opening balance plus the input credit which is he could avail on the purchases. So CGST ITC will be 50,000 opening balance and 27,000 which we calculated that on his purchases he has, interstate, 77,000 will be total ITC available to him, and on account of SGST 25,000 opening balance plus 27,000 for the whatever he has purchased during the year. So that means 52,000 rupees of ITC credit will be available to him. For IGST, it will be 60,000 opening balance plus the 18,000 for the purchase he has made from outside the state, 78,000. So this is the total ITC which is available to him. Okay, fine. So step 3, now we have to set off the liability to minimize the cash payment. Okay, so IGST liability is 72,000. Okay, for all the sales he has made. Okay, which is interstate. Now use the IGST, which is 78,000, to fully pay the IGST liability first. So if he has got some IGST liability, he has to complete from there. So his liability is 72,000. So okay, so his liability is 72,000. So there will be some remaining balance with him on account of IGST, which will be 6,000. Is that okay? So that means he doesn't have to make any cash payment because his IGST liability will be met out of the IGST credit which he has got, and still some balance will remain with him. Hello. हाँ बोलो प्रशांत. नहीं कोई दिक्कत नहीं थी, बताओ. हाँ वो सिर्फ प्रॉब्लम क्या हुआ था कि वो ना गलत रूट ले लिया था उसने, तो बट फिर भी हम पहुंच गए. मतलब ही वाज कमिंग आई थिंक फॉर द फर्स्ट टाइम थ्रू KMP. हाँ कोई नहीं. हाँ बिल्कुल. अभी तो मेरे पास, मैं बहुत जल्दी चल देता हूँ तो मेरे पास टाइम होता है काफ़ी. अच्छा सुनो, मेरे को ना अभी ना फ़ोन आया था घर से ही. मेरा जो ब्रदर है ना, ही इज़ हॉस्पिटलाइज. ओके, ही इज़ इन ICU. सो आई विल बी रशिंग आफ्टर दिस क्लास, बट आई मे कम बैक एट 5 एंड अगेन टेक द लेक्चर. इफ़ नॉट देन आई विल टेक अ ऑनलाइन लेक्चर, अगर नहीं हो पाया तो. ठीक है, तो ये तुषा को भी बता देना. मुझे अभी बस 1 बजे निकलना पड़ेगा फटाफट यहाँ से. ओके. So is that okay? Any doubt here? What about Nirti? Is it okay? Because you missed the last class, okay, and many other students also. So now we have a CGST liability of 90,000. Okay, so he has to pay central government state tax of 90,000. So he is going to use the ITC credit of 77,000. He can use the ITC credit which is available to him. Okay, and fully utilize, that is the opening balance plus the ITC available to him. Fully utilize ITC of 77,000. So remaining would be 13,000, isn't it? So he has to pay balance 13,000. So now he is going to use the IGST credit. He can use that. Okay. So he has some balance of 6,000 left under the interstate this thing. So he can. So that is allowed. What is not allowed is between CGST and SGST. So if that credit cannot be used, cross utilization cannot be done. But if he has got some IGST credit, he can use it for making a payment of CGST as well as SGST. So that means he is supposed to make a cash payment of 7,000. Fine. Is that okay? Is this clear? Any doubt here? Okay. Then we have SGST liability, which is 90,000 rupees, which we calculated. So use the SGST ITC, which is 52,000. Fully utilize SGST ITC credit 52,000. Remaining SGST liability will be 38,000. Okay. So his liability was 90,000 and he has a ITC credit of 52,000. So that means he has to pay 38,000. So since he has already exhausted IGST, so he can't take any credit. Okay. So no IGST available for IGST because there is no balance left. Otherwise, if there was a balance, he would have taken that. So cash payment will be 38,000. Is that okay? Then total cash payment will be CGST 7,000, SGST 38,000 and IGST 0. On account of IGST, there is no liability because he has paid the entire from the IGST credit available. So total cash payment will be 45,000. Okay. So this is the minimum cash he has to pay. Okay. Fine. If you make an error, then it may be higher. Okay. So you have to apply in such a way the credits which is available to him so that he pays the least amount to the government. Now, remaining ITC balances with him. So nothing is left because he has exhausted all the input credits available on account of CGST, SGST and the IGST. Okay. Fine. So if you look at this table, so this is the table. Output tax liability 90,000 for CGST, for SGST and IGST, the liability is there. ITC used is there, cash payment is there, and then the balance, the remark column which can show the balance, but balance is 0 here. Okay, fine. So now we do the second exercise. A little bit, it's again very simple. I mean, but the first example was of goods. The second example of services and goods put together. Okay. So Ananya, can you read?
A supplier of goods and services pays GST under the regular scheme. The company has made the following outward and inward taxable supplies during a tax period. Amounts are exclusive of taxes.
Okay. So these are the outward and inward taxable supplies. That means this is the total sale which the company has made during that period. Okay. So we have the interstate supply of goods 15 lakhs. Interstate supply of services 5 lakhs, interstate supply of goods, interstate supply of services, intrastate purchase of goods, interstate purchase of services, then interstate purchase of goods and interstate purchase of services. Okay, fine. Whereas in GST there is no difference between services and good because there is one tax. Okay, so he can take either credit under one this thing head. So this is the company has the following input tax credits which are available at the beginning of the tax period. So CGST 80,000, SGST 50,000 and IGST 1 lakh. They are very simple questions just to understand, so you understand all the concepts. Okay. Now additional information, applicable rates are as follows, which is 9% for goods and 9%, 18% IGST, and services it is 6% and the overall is 12% under IGST. Okay. All necessary conditions for availing ITC has been fulfilled. Both inward and outward supplies are exclusive taxes. IGST credit can be used to pay, now it is written here, IGST credit can be used to pay CGST and SGST or IGST liabilities, but not CGST and IGST credits cannot be cross utilized. So that means if you have a credit under account of CGST, you can't take the credit for making a payment of SGST. So state versus government, you can't do the cross utilization of ITC benefit. So task, compute the total output liability under all the scenarios. Determine the minimum GST payable in cash for tax period, ensuring optimum use of ITC. Calculate the remaining ITC balances, if any, after the tax liability is discharged. Make suitable assumptions wherever necessary. Okay. Step 1, again the same step. Okay. Compute interstate supply of goods. Compute the output tax liability. So this is the sales which you have made. Interstate supply of goods, interstate supply of services, interstate supply of goods and interstate supply of services. Okay. So he is going to calculate the tax liability on account everything. Okay. For goods, it is written that it is 18% or 9% each for CGST and SG. For services, it is given that the tax liability for that particular service is 12% or 6% each for SGST and CGST. And IGST will always be 18% because example is given 18%, and IGST for service it is written 12%. Of course, tax rates can vary, okay, but here in the example it's given like that. So total output tax liability will be CGST, SGST and IGST. So you simply add them up, okay, fine. Is that okay? Then third step would be compute input tax credit. So we'll say how much he has made of purchases, okay. So whatever purchases he has made, he has to calculate what is kind of input tax credit will be available to him, okay. For interstate purchases, goods were 6 lakhs. So the input tax credit will be 54,000 each on account of CGST and IGST at the rate of 9%. Interstate purchases of services, tax rate is given as 6%. So it will be 12,000 each under CGST and IGST. Then interstate purchase of goods. So interstate, that means IGST involved, and on goods it is 18%. The liability will be 54,000 on account of IGST. And for services, the rate is 12%, so it will be 12,000. Pretty simple calculations only. Somebody was asking that it will involve some complicated formulas. No, it's very simple. Simply multiplication and additions, not more than that. Okay. So total ITC after adding opening balances. So whatever purchases he has made plus whatever the opening balances, we have simply added them, and then here it is CGST, that means opening balance plus whatever purchases are made, it will come to 1,46,000. SGST, it will come to 1,60,000 opening balance for and purchases. IGST opening balance of 1 lakh plus for further sale which he has made outside the state, purchases, so it will be 1,66,000. Okay. So set of IGST liability 1,68,000. Okay. So he will use the ITC 1,66,000 balance he has got, okay, which we calculated here last, 1,66,000. Remaining will be 2,000. Okay. So that means he has to pay 2,000 rupees cash here. Okay. So ITC balance will be 0 under IGST. Similarly, look at the CGST. His liability is 1,65,000. Input credit available is 1,46,000. So remaining would be so that means 1,65,000 remaining CGST liability will be 19. I think there is some double count here. Okay. So you can just make a correction here. So remaining CGST liability will be 1,65,000 minus 1,40,000, so 19,000. Okay, fine. And I think even we have to delete this. So you just delete the extra things which are given here. So he has to pay 19,000. So his liability was 1,65,000. And his input credit was 1,46,000. So that means he has to pay 19,000 in cash. Is that okay? So there will be no ITC balance here also. He has exhausted everything. So then we come to the SGST. So his liability is 1,65,000, and he has got an input credit of 1,16,000. Okay. Remaining will be 49,000, which he has to pay in cash. So his balance will be 0. So if you look at the final payment, it will be like this: 19,000, 49,000, 2,000, and cash payment will be 70,000. Okay. So if you look at, there will be no ITC balances there. Okay. So if you look at the final table, it will be like this. It's very simple. So the exercise assignment is a very, very simple one. Okay. The assignment will carry only 5 marks. I'll give you one more assignment because it's a very simple one. So everybody is, but it has to be done in the same format what I have used. If you deviate from the format, reductions will be made. So now okay. So there is another So there's another PPT which I'll share, okay, once we complete this, okay. But I think I should share because if Ananya has to read or somebody has to read. Or I'll ask somebody else. Aditi, are you there? So you are going to read slides when I present, okay? When I ask you to do that. So I'm just going to share the slides, okay? Shreya, who's Shreya? You just joined today? Shreya added. Shreya added someone, isn't it? अच्छा अच्छा. किसको ऐड करा? Okay, okay.
Can you share it in PDF format rather than PPTX?
हाँ, I'll share that. I'll share on the blackboard, okay?
क्योंकि Apple में PPTX में सब आ नहीं
Okay.
रहा है.
I'll share it on a blackboard in the PDF form also.
Thank you, sir.
Okay. You can send any message on the WhatsApp. I'll do that, okay? Fine, if there's an issue there. So I've just shared this. Okay, the PPT name is GST summary. Okay, I gave this name earlier, but now it contains most of the the law in detail. Okay, fine. So the goods and services tax, we are just revising a little bit and going further. Okay, yeah, Aditi.
I'll read out
Yeah, can you read?
the Goods and Services Tax Act, which was introduced in India in 2017, is an indirect tax system that has replaced a range of taxes and levies that were previously imposed by the central and state governments. Some of the important tax provisions of the GST Act in India are:
So it is basically taxes and levies, okay? Fine. You were saying something else, okay? I don't know whether that's the right pronunciation of this one. So it's levies, we always call them, maybe. Because always there is a different pronunciation for different this thing, okay? So, yeah. Okay, the GST, I'll just read, don't worry. The GST Act has four tax rates, 5%, 12%, 18% and 28%. Of course, there are two more for gold and precious, stones. These are the normal ones, okay? And there are, okay. Certain goods and services are exempted from the GST or taxed at a lower rate, okay? So we'll talk about that, which are the goods which are exempt, which I have already, shared, but I'll just talk about more in detail about them. Now, if you are a business person and you are registered, you're entitled for ITC credit. So we have already done a question, okay? So registered businesses can claim credit of for the GST paid on inputs used in production of goods or services. This helps to reduce the tax liability of businesses and prevents the cascading effect of taxes. So that means the taxes become basically simply the pass-throughs in terms of the chains of businesses. Only the liability goes up on account of value added by the respective intermediary. If it's a producer, then it goes to wholesaler, then goes to distributor, then goes to retailer. So everybody is adding some value, so tax liability will go up. Okay, fine. But it'll go as a pass-through. So whatever tax which has been paid by someone, the other person will take the credit, and on his value addition, he's going to deposit that tax with the government, okay, after using the input tax credit. So there is a reverse charge mechanism where normally the supplier pays the taxes. The person who is providing the services, he has to pay the tax. The customer doesn't have to pay the tax to the government, okay? But in this case, a reverse charge mechanism, the customer or the recipient of the goods or services, he is required to pay taxes. We'll discuss that more in detail, though we have discussed, but we are going to, go into this a separate lecture on that, which I'll cover later. So then there is some composition scheme. So for all those, small businesses, They can avoid, all kinds of, various kinds of returns and comply with all the rules and regulations. They have to have a minimum compliance. So small businesses with a turnover of 1.5 crores can opt for composition scheme, which allows them to pay a fixed percentage of turnover as a tax. So they have to pay just fixed, like 1% or 5%. So for various kinds of, people who are doing business, some different rates have been given for the person who is having a turnover of less than 1.5 crores. Okay. Now this is very important. Okay. But for composition scheme, suppose you happen in a state like Uttarakhand or Northern, then the limit goes from 1.5 crores to a little lower amount. So we are going not discussing at that amount. Okay. So this is very important. Electronic way bill. Okay. This is kind of an anti-evasion tax measure, that anybody who is going to supply goods to someone, he has to generate an electronic way bill through the GST portal. It can be done from your mobile also. Whenever you buy goods from someone, or a businessman buy goods from someone, or he's supplying the goods to someone, he has to make an electronic way bill. It is only applicable for, I think, for goods only, not for services. So the GST Act requires the generation of an electronic way bill for the movement of goods worth more than 50,000. So if somebody is supplying goods above 50,000, he can't supply it like this. So he has to raise a electronic